Mm. Thank you very much, Anuj, for explaining the setup for us. We still have Aditya Suresh with us. Aditya, once again, thank you for waiting by. Wanted to get your thoughts in on the consumer segment because we've got a lot of business updates so far, and they all point to a muted volume growth in the current quarter. Just 1 month back, everyone was bullish on FMCG, citing that the lower commodity prices will boost their gross margins in the second half of the year. So everyone was buying these FMCG stocks. But now, based on the earnings updates that we've got, what's the call that you have? And what's the growth for the full year in terms of EPS estimates and the stocks that you like?
So in consumer, our messaging has been fairly selective and taking us back a few minutes. The whole point is about one small slice of the consumer is doing well, and that's at the top end. Look at the RBI kind of confidence surveys on urban mass, that remains fairly poor still. Look at kind of the data coming out on rural India, that's still challenging, right? So real wage growth is still negative in rural India. So I think there's a lot of hope and optimism that this thing kind of looks better into the second half. But that's clearly, yeah, we've had headwinds to that story, right? So we are playing this more through consumer discretionary at the top end. We've liked autos as a space as well within that. But incrementally, a lot of this trade already kind of expressed itself. So even within discretionary, we're feeling far more cautious than what we were, say, 6 months back or 12 months back. On the margins, though, I think here is something where we kind of flag that when you actually look at margin estimates for consensus, whether it be in staples or in discretionary, and if you look at the trend of the past few quarters, consensus has cut margins. And so that kind of gives us a bit of confidence that incrementally, and to kind of Anuj's point about kind of commodity prices kind of softening, incrementally things perhaps look better. And that kind of gives us a bit of confidence at an aggregate level that when we're speaking about India growing at 16%, we're feeling comfortable because we've already seen the cuts to kind of consumer sector margins kind of expressing itself. In the discretionary names, I think here, using the auto sector as an example, yes, we are constructive on the cycle on PVs, etc. But because of that, we do have an operating leverage kind of comment, which is expressing itself as well. EBITDA margins are up about 200 basis points over the next couple of years. But if broader sentiment is weak and volumes are going to be soft, then there is clearly downside to what we're forecasting for discretionary. In all, I think the message is still very, very selective and cautious. Where we do have confidence is on financials, anti-consensus, positive on say IT. Everywhere else, it's fairly selective.
All right. Thank you very much, Aditya, for joining us and running us through all that you're making of things at this point in time.